and welcome to Business 360. I'm Arundhati Ramnan, and here are the headlines that we're tracking for you this evening. It's a sea of red on the Lal Street. Sensex loses over 1,500 points. Nifty down over 2%. Shares on BSE see their market capitalization decline by 4 lakh crore rupees. HDFC Bank shares mark the worst single-day fall in 3 years, wiping out over 1 lakh crore rupees in market cap. Street gets spooked by a deterioration in the credit deposit ratio and liquidity coverage ratio in Q3. HDFC Bank accounts for more than 50% of the fall in the Nifty. China's annual GDP slows to the lowest level in more than 3 decades, excluding the pandemic years. Stocks tumble across Shanghai and Hong Kong as China's population decline also accelerates. Stock markets are subdued across the world after fears that the US Fed could delay the potential rate cuts. Tensions escalate across West Asia. Iran launches airstrikes in Pakistan, claims sites belonging to a Sunni militant group as its target. Pakistan calls the assault an unprovoked violation of its airspace. Israel continues to bomb Gaza, with Hamas claiming residences and hospitals were targeted.
Today, the world is thanking us for buying Russian oil.
And I would expect that we may see a reasonable price range for 2024.
Petroleum Minister Hardeep Puri defends India's decision to buy oil from Russia, tells CNBC-TV18 that its pragmatic policies have helped calm the market, stop short of speculating on a fuel price cut. IEA Chief Fatih Birol says crude price range will remain reasonable in 2024. Infosys is positioning itself as an AI-first company, says CEO Salil Parekh in Davos, says every client is looking at leveraging generative AI, also adds that demand environment remains similar to what it was in Q2. PwC annual global CEO survey highlights an air of positivity around India, even as inflation and labor market tightness risks persist. Almost 9 out of 10 India CEOs believe that the Indian economy will improve over the next 12 months. PwC Global Chief tells CNBC-TV18 that India is top of mind for CEOs around the world. Asian Paints reports a steady Q3, profits up 35% and revenues rise over 5%. Margins beat estimates with a healthy volume growth of 12%. India's External Affairs Minister Jaishankar says talks with Maldives will continue. This after the island nation set March 15th as the deadline for Indian troops to leave the country. Jaishankar adds that Indian troops have been helping with evacuations and medical aid, calls for civility from Maldivian officials after 3 ministers were suspended for statements against Prime Minister Modi. Byju's opposes BCCI's insolvency plea at the company law tribunal, says negotiations to settle payment dispute is underway and seeks arbitration. BCCI refutes Byju's claim, says it only heard about Byju's intent to settle in the media. Those were the headlines that we're tracking for you this evening, but let's start with the market action of the day. A cocktail of weak global news flow and domestic cues led to a sharp sell-off on the Lal Street. Sensex lost over 1,600 points and the Nifty lost over 450 points. The 2% drop on the indices is the worst single-day fall in nearly 2 years. Bank stocks fell the most, led by HDFC Bank. Mid-caps also saw sharp cuts but fared relatively better compared to the blue chips. All in all, shares on the Bombay Stock Exchange saw their market capitalization wiped out by 4 lakh crore rupees. Prashant Nair is here with all of that market action. Prashant, it was red across the screen today.
Complete washout of a session today. The Nifty ending down 500 points nearly, and the Bank Nifty losing 2,000 points. In percentage terms, I mean, in the Nifty Bank, it's a 4% smackdown that we saw. Mid-caps and small caps did better as compared to large caps. The indices were down about 1% or so, roughly. The single sort of, if you had to blame one name or one sector, it's banks, and one name is HDFC Bank. The indication, of course, was from the ADR overnight, which was down very sharply. Numbers disappointed and a complete washout there. It's a large weighted stock, both on the Nifty Bank and, of course, on the Nifty, and it had an outsized impact. Actually almost about 45-50% of the Nifty losses, and of course more on the Nifty Bank, came in through just that one name. But there was collateral damage because of HDFC Bank. Other banks, right, and these are large caps, Kotak Bank, IDFC First Bank, Axis, Federal Bank, ICICI, Bank of Baroda, a mix of public and private, they all took knocks. But there were other pockets of losses, not just banking. So metals as a pack was down. It had seen some gains yesterday. Autos and real estate were the other two areas which saw some profit booking. Now, in the large caps, apart from the financial, Tata Steel, Hindalco, Adani Enterprises, top losers. JSW Steel saw some pullback. UPL and Grasim were some of the other names. Broader market, lots happening. Advanced decline was completely in favor of what was down. But I must say, the list of volume-led losers is not very long as compared to what went up. That list is smaller, but the list of stocks going up on volumes is longer than what was down. But anyway, I'll start with what was down. IEX, sharp knock, 10%. Zomato, Steel Authority of India, Tourism Finance Corp, South Indian Bank, Ease My Trip, sharply pulled back. Lodha, Sanghi Industries, Arvind. What was higher? Well, PSUs, right? Look at this. IRFC, RVNL, Cochin Shipyard, IRDA, Hoodco, Midhani Industries, ITDC, Dredging Corp. That's the pack where there was tremendous action. There was some results-related reaction as well. ICICI Lombard is the one which kind of stood out. So, I mean, we've broken some averages, and I think we basically need... Today, of course, it was also global markets which participated on the downside. Will that be the case when we come back tomorrow? I think that's the big question. And should we be ready for a slightly more deeper pullback? Back to you.
Right, Prashant. Many thanks for those details. But staying with the markets, HDFC Bank shares declined about 8%, marking the worst single-day fall in 3 years. Today's sell-off wiped out over 1 lakh crore rupees in market capitalization. In fact, HDFC Bank shares accounted for more than 50% of the fall in Nifty and the Nifty Bank. So why did the stock fall so much after its profit mildly beat market estimates? Lata Venkatesh is here with those details. Lata?
Well, yes, the profit beat, but it's the margins that the market was looking at. The margins came in at 3.4%, exactly as it did in the second quarter when the merger was actually, brought into fruition. Now, the whisper on the street was that the bank had apparently indicated that margins would improve. Second quarter, they were hit by the incremental cash reserve ratio, and the Q3 margins would be better, but it was not. And that disappointment took its toll. Now, what do we mean by margins? A 3.4% margin means that every time the bank gives a loan of 100 rupees, it makes 103.4 on every 100 rupee loan. But HDFC Bank, historically for the past 25 years, has had a margin of 4.2 to 4.3%, and that is how it is priced. The other fear in the street is that there is no spare cash left. The bank had some extra government securities which it sold, bringing down its what you call liquidity coverage ratio. But that money was more to provide for the investments it has made in alternate investment funds, AIFs, according to the new rule. So there's no spare cash left. The third worry is that the bank's LDR, loan to deposit ratio, is a very uncomfortable 110%, which means it has given 110 rupees of loans for 100 rupees of deposits. So now it has to keep borrowing that balance 10 rupees from the market at higher rates. It's borrowing short to lend long, and that is worrying the market. It puts pressure on margins because you're desperate to borrow. And the point is that when a leader like HDFC is borrowing, at any cost, then it pushes up the cost of deposits for the entire banking system. Now, the other part is market is questioning whether HDFC Bank should get the high valuation that it has got. It is always priced more pricier than other banks. But if the margins are not going to go back to 4.3 or 4.2, but remain at 3.4, then people are questioning. For instance, ICICI Bank in the Q2 had reported a margin of 4.3%. So, people will wonder, why should HDFC Bank get a higher valuation or even the same valuation as ICICI Bank? There are some people who say, a Macquarie report says that now what do you outlook for HDFC Bank? They have to produce an operating profit before provisions of 20% higher every year, and they have to bring down their cost, what you call cost to income, by 1 percentage point. So bring down costs as well as generate profit. The other comment comes from BNP Paribas, which says that you have to forget this 4.2, 4.3% margins. It won't get back because a large part of its product now is home loans. Home loans, by definition, are a low-margin product. And that home loan is portfolio is what it got from HDFC. So there is a lot of negativity surrounding the bank, believing that the prices can't rise anytime soon. But what is worst is the situation, the timing. HDFC Bank is held almost 75% by foreigners. And today, the foreign community was anyway selling emerging markets in India because of a rise in the US bond yields. And therefore, the worst situation was for HDFC Bank, held more by foreigners. They are in sell mode. And there is a feeling that this is not a one-day problem or a one-quarter problem. It is likely to persist.
Right, Lata, many thanks for those details and for decoding why HDFC shares fell so much in trade today. LIC's shares, meanwhile, crossed its listing day price for the first time after overtaking State Bank of India to become the most valuable PSU. The insurer's current market capitalization stands at 5.64 lakh crore rupees compared to SBI's 5.6 lakh crore rupees. The company's stock has rallied 43% in the last 6 months. However, its returns over 12 months remain far lower than other PSE index constituents like REC, PFC, BHEL and HAL. China's GDP rose by 5.2% in the last quarter of 2023, missing street estimates. Full-year GDP growth also jumped by 5.2%, higher than the 5% growth that Beijing had forecasted. Real estate investment for the full year fell by 9.6%. However, investment in infrastructure and manufacturing saw some uptick. Analysts believe the China economic slowdown is because of the transition to a new growth model. The war between Israel and Hamas continues to rage on. The Israeli military has claimed to have killed 6 Hamas operatives in southern and central Gaza. The IDF said that they destroyed rocket launchers used from inside Gaza to attack an Israeli city earlier this week. Meanwhile, Israel and Hamas has reached a deal to allow medicines to reach Israeli hostages in Gaza in return for additional medicine and aid to Palestinian citizens in Gaza. The deal was brokered by Qatar, which served as the mediator. And sticking with the growing tensions in West Asia, Iran launched an airstrike targeting Pakistan territory. The Shia-dominated nation claimed that it hit sites linked to a Sunni militant group. Pakistan said 2 children were killed in the attacks, called it a violation of its airspace, and summoned Tehran's top diplomat. The group that Iran claimed to have targeted has been waging a war with both Tehran and Islamabad for independence of Sistan and Balochistan provinces. Petroleum Minister Hardeep Singh Puri has defended India's decision to buy oil from Russia. Speaking to CNBC-TV18 on the sidelines of the World Economic Forum's annual Davos meet, Puri said that India's pragmatic policies have helped calm the markets. The minister also added that attempts to disrupt supply lines are concerning. Meanwhile, International Energy Agency's chief Fatih Birol told CNBC-TV18 that crude price range will remain reasonable in 2024. Take a look.
Today, the world is thanking us for buying Russian oil, because otherwise we would have been focusing on buying the oil from those countries and oil price would have gone up to 250. So India, through its pragmatic policies, has actually helped calm the market, and I think we're getting credit for that. India, apart from Japan, is the only country in the world where over a 2-year period, prices of petrol and diesel at the bunk came down.
You don't believe that a cut is imminent at this point?
No, I don't speculate on the imminence or otherwise of a cut.
Huge amount of new oil production is coming from Americas, United States, Canada, Brazil, Guyana, and this growth is higher than the expected oil demand growth. I would expect that we may see a reasonable price range for 2024.
Infosys CEO Salil Parekh says he is having positive meetings with clients at Davos. Speaking to Shireen Bhan, Parekh said that every client is looking at what generative AI can do for them, and that's why Infosys has positioned itself as an AI-first company. He also added that Infosys is using AI for HR, recruitment, sales, and delivery. On revenue and margin growth, Salil Parekh said Infosys has put in place a comprehensive plan that should bring large benefits.
Our sense is every client is looking at what generative AI can do for them. We've ourselves positioned as an AI-first company, so we're using all of these things inside. We have assistants, AI assistants now for each of our functions, whether you look at HR, recruiting, sales, delivery. So that is a transformation inside.
And staying with Davos, a PwC annual global survey has highlighted an air of positivity around India. This even as inflation and labor market tightness risks have continued to persist. As per the survey, almost 9 out of 10 India CEOs believe that the Indian economy will improve over the next 12 months. The survey also highlights that 70% of Indian CEOs are confident that their company's revenue growth over the next 3 years. Speaking to Shireen Ban on the sidelines of the Davos summit, PwC Global CEO has said that India is top of mind for CEOs around the world. Take a look.
The CEO survey focuses on where would you invest other than your home country. And India has continued to rise quite a bit. And the anecdotal evidence amongst the CEO community is a significant rise in terms of mindset and top of mind relevant to their capital deployment. And you see three opportunities. One is the continued rise of the consumer in India that needs to be served. Second is the ability to invest in India from a perspective of the supply chain opportunities that exist as organizations try to diversify their supply chain, automate it, and make it more greener. And last but not least is the ability for India to continue to serve the world and operate more globally as well.
A point that people don't give enough attention to is a lot of people talk about diversity, but diversity without inclusion is also a big trap that a lot of organizations get into. Because I think that you keep chasing metrics of, I need to have, let's say, 50% women target by 2030. Or, each team, which is 5 and above, should have at least one woman who is part of the team. Sometimes this gets crowded in the fact that inclusion is extremely important, because a lot of the times you start ticking off boxes and metrics, but the experience is not that great.
In all the conversations, there has been a lot of optimism on India. And I can say that over the years, I've seen that change fairly dramatically. And even compared to last year, there's significantly more optimism because people are seeing India as a long-term market. They're also seeing India as a supply chain hub, not necessarily an alternative to China. It is a hub standalone in itself. And the questions now are, how can we come to India and make it work? Because we want to be there in the long term.
Asian Paints has reported a good set of numbers in net profit and margins beat street estimates, while revenue was largely in line. The Asian Paints management said that an extended festive season supported growth through tough demand in the latter part of the quarter moderated. On that note, it is time for us to head into a short break. But coming up, Byju's opposes BCCI's insolvency plea at the company law tribunal. Details on the other side. Stay tuned. Welcome back. You're still with us on Business 360. India's External Affairs Minister Jaishankar says talks with Maldives will continue. This after the island nation set March 15th as the deadline for Indian troops to leave the country. Jaishankar added that Indian troops have been helping with evacuations and medical aid. He also called for civility from Maldivian officials after 3 ministers were suspended for statements against Prime Minister Modi.
Ask the people with whom you have a daily rub in your lives. Are they excited about it? Do they get the importance of it? And I think you will see it as so. So I think there's a genuine today feeling in this country about what is happening, and I think to make it appear political is really in a way to trivialize it.
Meanwhile, troubled EdTech major Byju's has opposed BCCI's insolvency plea against it in the National Company Law Tribunal, citing arbitral proceedings. Meanwhile, the company has claimed that it is in talks with the BCCI to settle the 158 crore rupee payments dispute. However, the BCCI has denied any such talks. Ashmit Kumar is here with more. Ashmit?
Well, what began as a payment dispute between BCCI and Byju's then translated into an insolvency proceeding before the NCLT, and now the fear is that it will now translate into an arbitration proceedings between the two sides. Before we delve into the takeaways from today's NCLT hearing in Bengaluru, here is the issue that lies at the heart of the matter. BCCI is claiming unpaid dues of 158 crore rupees from Byju's as a part of its sponsorship agreement. Byju's begs to differ, says there are complex questions of laws as well as facts. Now, with that in mind, their counsel, Byju's counsels, appeared before the NCLT Bengaluru today, where they submitted that they have filed for moving this dispute to arbitration. Byju's counsels were very clear that up until the arbitration proceedings take place and there's a final decision by the arbitrator, no further insolvency proceedings can take place. And to that end, they have objected to the IBC process initiated by the BCCI against the Byju's. Not just that, they also sought deferment of hearing for a slightly longer period. The reason being, Byju's counsels claimed that there are negotiation talks that are currently underway between the two sides. However, this was promptly denied by the counsel for BCCI. The BCCI counsel saying that all they've heard for by way of negotiations are articles and reports that appeared in the media. There has been no conversation stemming from Byju's for resolving this payment dispute. So that is the status quo as far as the payment dispute is concerned. The next hearing in this case is scheduled for February 7th.
All right, Ashmit, many thanks for those details. But with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.